What's going on, guys? This is Brinks Trades coming to you live with another week of breakdowns. Hopefully, everybody's doing good. Hopefully, everybody is doing well. Let me go ahead and drop this in the chat really quickly, and then we can. Boom. So yeah, hopefully everybody's doing well. We've had some crazy markets over the past couple weeks. And yeah, some really good trading this past couple weeks. So first things first, again, if you guys don't know who I am, my name is Blake, aka Brinks Trades. Been trading for a decade online, and really just basically have started in the forex space back in 2015, moved into the futures space a few years ago, and really just trying to trade a mixture of both currencies and futures and indices. Mainly my main kind of charts that I look at are like Nasdaq and the euro and etc. So again, it's been about 10 years, and I've learned a lot along the journey, and just kind of want to spread a lot, that I do via social media. So I'm going to go ahead and pause this really quickly. I'm going to share this to my Facebook and Instagram so people can jump on live and check things out now. Just give me 2 seconds, and then we'll hop right back in. Do that, and then we'll go ahead and hop right into it. Post, and let's hop back here. Boom, boom. Okay. Yeah, so all right, so basically, again, I want to start with Forex Factory. Well, actually, before I get to Forex Factory, I want to start with what's going on over the past couple of weeks. So I'm gonna hop in the lab, and I'm gonna jump over to my group chat. Again, it's called Talented Tenth Traders. Shit just happens dead. So I had a really good month, really good June. If you check out basically some of these screenshots, in my community, I basically outlined everything that I think is going to happen in real time when these trades are playing out. And so if we go back to the beginning of June, man, it was a crazy month. And I've probably talked about some of these already, but June 11th, this is still June. Yeah, there we go. Boom. So I took a break in May, and I came back in June. So you can see here some of these trades that I took. Obviously, we're shorting, so was able to knock out some trades there. And I'm basically calling these things out in real time. So again, if I'm taking a short position here and watching the market play out, again, market traded back up in that range, fell over. Again, be able to show off some executions there and what I was able to knock out. So 19 contracts there. for a crazy week. I ended up walking away with 3K that day. But overall, for the month of May, I ended up ending my week with a little over $16,000 in total withdrawals. So almost $17,000 for the month of June, which is a crazy great month for me. And honestly, since I'm trading with my own capital, right, being able to pull 17K out of the market in a month is crazy. It's a really cool feeling. And there's not too many things in trades and positions in the world or jobs in the world where you can walk away and kind of make that in a month, right? I mean, that's equivalent. I think that's about a little over 200K a year, right? So 17 times 12, yes, 204 a year, which is again obviously not going to say that every month it's going to be like that. Some months might be more, some months might be less, but that's a crazy, awesome ability to be able to take that out. So even with a six-figure job, that's still double your income, right? So awesome June. So let's go ahead and look into Forex Factory. So the next thing I usually do is really go to Forex Factory, which is the basically tells me what news and events are going to go on for the week. And so once I understand that, I can kind of start to formulate my strategy and figure out which days I'm going to want to stay away from, which days I'm going to trade, and which days I'm going to, do other things. So coming into next week, again, it's the week after 4th of July. Last week, we had some pretty big news releases in NFP and the FOMC, the first FOMC of a new tenure of a Fed chair. Jerome Powell is the previous Fed chair, so he's no longer there. So going into June or this Monday, July, there's not too many news statements, which could be really good. Open trading and then FOMC meetings minutes. So FOMC is on Wednesday. So again, not looking to trade too heavily past Wednesday. Again, you can see Thursday, there's nothing there. And then Friday, there's CAD unemployment claims in Canada. I really only look for things that are going on in the US. So really this week could be a very slow week news-wise, which means it could be a good potential opportunity for setups. So I'll be looking to see what the market gives us going into next week. But let's go ahead and take a look at the charts. And then let me see if anybody's on here. I don't think anybody's online. So yeah, okay, let's go ahead and look at the charts. Switch over to this tab. And again, here I'm just really trying to understand what's going on in the markets based on technical analysis and the way that I see things, and try to formulate again what's going on. So it's a new month, so start at the top and see what's going on with this. And so I called out a couple of things that I think is going to happen over the next year or two when it comes to the dollar. And so we basically had, coming into 2022, we set this initial high here. We had some consolidation. The market ran up into this old fair value gap, which is a daily, weekly, and monthly level. It broke structure. And really, the last couple of months have just been the market consolidating, right? So if you think about those 1 minute time frames, the smaller time frames, and you see the market consolidating and start to run up to this next level of liquidity. That's basically where we're at right now. And so it just so happens that this is a yearly window, yearly cycle. So overall, I've been calling this. I really see the market potentially getting down to the dollar reaching 89. And that's kind of what I want to see here, but it depends on how we react over the next few months. So I told everybody that really I want to see the market trade back up into this fair value gap here. So I could see the month of August really potentially reaching back up into this gap. In the even here, we just note that we set an initial high last month or 2 months ago, back in June, and then I'm sorry, 2 months ago, last month in June, and failed to take that high. So we are building some liquidity here. So I will usually make a note that says we're there's something building there on its way to this overall fair value gap. So if we jump down to the weekly time frame, you can see here that I think long term the market's going to potentially run into this gap, potentially respect consequent encroachment, and then just run lower. Right. So that's potentially what I think could potentially happen here. If I go to the daily, you can see it's a little clearer. Just this range right here again. But this is a lot of chop, and it's tough trading in this, so that's why I've really been trading a lot of currencies lately. But if we jump to the euro, I called out a few things. Again, go to the monthly time frame. Let's do this one instead. There you go. The euro. I've basically been calling that I want to see the market run lower. And I've been saying this based on a few things. If you just look here, we had three hits to the high. Again, we ran up into liquidity once, set initial high, right? And swipe that. Then we set which gave us a second initial high. We ran up to the high one more time. Took that liquidity, again, that buy side liquidity there, and then ran over, right? And so this is pretty much just showing us the market, has a hesitancy to go higher, and we're starting to break down to the downside. We came down here, took this low here, which is basically where I thought my target was going to be for this week. And long term, again, hitting the same level here. And again, if you look at this from a monthly perspective, it's kind of the opposite of what we're seeing on euro or on dollar. So we want to see the market potentially come down to here so it could rebound and go higher. Pretty much the opposite scenario. So ultimately, I do think market's going to start making higher highs in euro. I don't know what's going to trigger that. Maybe it's like a recession. Maybe there's some underlying economic event, but that's kind of what I'm seeing. So ideally, I want to see the market run up higher and then go lower. And that's what I've called out over the past few weeks. Going into this week, again, you can see that there's a few things that happened since then. We traded back into this fair value gap, this SIBI here. There's actually a series of them right here, right there. And there's a third one right there. We've set this initial high like this, failed to take it. So we could see one of two things. We could see a sweep where we come up and take out the high of Friday or the high of last week one more time and then dip lower. But ideally, this looks very bearish to me. Like the market wants to continue running lower. I would just be waiting for some market structure shifts on like the hour, the 4-hour time frame to really confirm that. And we did get a mini one right there, but I wouldn't be surprised if we came back up, maybe swept Friday's high or swept that high again and ran lower. Again, I'm not the currency. I'm not trading as much currencies right now because the dollar is so conjumbled. And to be honest, I mean, I'm leaning bearish, but I can make a case that this could run bullish as well. And so just based on the rejection of this level, but I'm like 80-20 leaning bearish on this. But because I'm not 100%, I'd rather just wait for a bigger play. But I think this is a pretty clear bearish indication. What I'm seeing on NASDAQ right now is just more fun and it's easier to get in and out. And for my personal, like my lifestyle and experience level, I think is the big thing too. Having all that together really just, lets me lead to trading NASDAQ more. But again, if I was looking at currencies, I would definitely be identifying and looking for short opportunities here. So again, same thing on dollar. You can see here the monthly time frame. We set these initial lows and we've been rejecting them. So I'm looking at us to run to highs at this point. Let me look at the daily. Again, the daily is kind of giving us, it's a little bit more congested and consolidated, but it's ideally the same idea where we came up, set an initial high, took out that high here, and have really been trading, giving us, quote unquote lower lows ever since, but really just us hunting for sell side liquidity, right? Is kind of like the more technical thought process there. Here's a really good sign is that the market wicked through consequent encroachment into this fair value gap here once. It tried to go through it again and failed. I wouldn't be surprised if we opened up higher maybe and then immediately tanked. I could also see us going like opening lower, trading up one more time, sweeping that and then running lower. But either way, this looks pretty bearish to me. It's not as clear as euro because there's a lot more chop here and a less, like euro had more of we ran up once, boom, we ran up twice, right? And then we took took 3 times and then kind of tanked. This is less clear like that. It's a little bit more consolidated, but still overall bearish. So ideally, that's what I'm thinking for euro. Let me go to NASDAQ. This is really where the bulk of my attention has been the past few weeks. Just a lot of volatility. I do want to start with the monthly time frame, just kind of show you what's been happening. This month was very bullish. Our last few months were very bullish. Last month in particular was actually, decently bearish. starting a retracement. And again, Nasdaq is the point of Nasdaq is that it's supposed to rise over time, right? You put money in Nasdaq and it goes higher, right? It might take you a little while, but it's gonna eventually rise. And so that's because it feeds investment portfolios, et cetera, right? People are actively investing their money for the long term, and the companies that are in the Nasdaq, it's just built to go higher, right? So what do I see here on the monthly time frame? I see a couple of things. The first thing is that the market broke structure to the upside and traded back into this, or has retraced once and then failed to retrace again, right? So this is a really interesting setup here because I see a couple of things that could happen. This wick here could tell us that the market has tried to run lower to this gap, or it could just be setting an initial low on a new fair value gap, which is right here, right? So I could see a couple of things happen. I could see with July kicking off, we could run lower into this gap. We could take this, we could, completely wick out and then start running lower to the downside because we have really been on an extended run. I mean, really since December or April of last year when we get this low of like 15,000. I mean, think about if you would have invested all of your money into the S&P, you'd be up double right now, which is that's a crazy window to be doubled. And think about where we were trading at in the S&P, even just back during COVID, right? Like we were at 7,000 and now we're trading at 30,000. This is overdue for a massive price correction. But yeah, I mean, that's the power of the S&P. I mean, we're talking like 3 years, I mean, 6 years since COVID. So imagine tripling your money in COVID if you invested like $1 million or, $2 million. And that's the power of really long-term investing. I'm a little different though. We trade a little different here, but your strategy should definitely have long-term and short-term investment options. You shouldn't be just 100% a day trader. So going into the daily time frame, you can see here that the market is starting to wedge, and I called this out. And again, when I first started trading, I used to have I used to not be able to see this, so I end up losing a lot of money. And I'm not saying you have to trade off of these like support and resistance, but just understanding that the market is wedging. And what I mean by wedging is that the highs are getting lower and the lows are getting higher. So you can see these highs are getting lower, and the highs are getting higher, right? So what that's doing is kind of like a spring, right? We stretch a spring back and it's kind of compressing more and more and more. Basically looking for a search of liquidity, right? So we kind of want to wait for the market to find that, to really have a long-term view on the market, because it could just come out, rip out, start running lower, and that would be justified, or it could also run higher, right? So what am I looking for day to day, right? So day to day, I'm really looking for, I'm gonna throw this on here. See everything. So I'm really just looking for opportunities to trade in the market, irrespective of what the daily setup is. And so with these, I'm gonna do this one more time so I can see some of the past settings. Show current week sessions only. Show last 4 week sessions. I think that's it. Boom. So if I get rid of some of these gaps, but you can see the Asian ranges on here. So I'm really just looking for a standard power 3 right out of these, and just trying to understand what the market's reacting to based off of these levels. So again, Friday, I think Thursday was a really good opportunity. Yeah, Thursday was a really good opportunity because initially I wanted to catch this long, and there was 2 positions I ended up taking. One I ended up only getting out like 100 up, and the other one I ended up making 1,300 on. I closed the week out, which is awesome. Yeah, so really, again, seeing the market took out the Asian lows, I was able to, I'll actually talk about these. I'll break these down. I'll go back to Discord and talk through these positions. And if you're watching this and you're live and you have comments and things like that, just feel free to drop a comment in the box. Let me know you're listening or watching. But yeah, so let me pull these up on Discord So I took a few trades last week and I kind of outlined just a high level what they were. But we can go back through each of the days. So the first day was 629. It was June 29. So again, I think these were really easy shorts, right? So I ended up seeing the markets. I think it was here. Saw the market, took out the Asian highs, and I thought we were going to get a retracement back into the range. And so let me see what happened here. It's 29. This is the June 30th. Yep. So 629. I have it written out here. Came into the market, a market open, saw the market was trading, had taken out the high of Asia, so wanted to see it retracing back into the range. Ended up taking a position when market broke structure here and ended up riding it down for a good 300 points, 200 points, something like that to the low of Asia. And I think I ended up, exiting at the low. And I saw it. I always, and the thing about being a trader is that you always will get your entries. You can get your entries perfect, but the exits are never going to be perfect. And that's one of the things I have to come to terms with is that the market will never give you perfect exits. But again, this was about a 1 to 2, right? So a really good setup. Again, I ended up taking a short position early at about 9:30, and ended up getting my initial short in here because I thought the market was going to run lower, but it came back out, took the high, tapped the high, or tapped the consequent encroachment in this range, traded back into the range. This was a little bit of a stressful 30 minutes, 20 minutes. And the market came back down and took out the lows. Again, the one thing about trading is that you just don't want to jump the gun. Jumping the gun gives you so much more stress, and it ends up taking away your potential profits. So I ended up entering here on a position, thinking that the market was going to run bearish. Saw the market climb back up, still had the position on, and instead of entering, you know, here where I should, right when the market broke structure and kind of started to trade back into the range, some other confirmations there too. I ended up basically getting in down here, and that cost me about $1,000 of profits for my overall target. I think I walked away with like a 3K day, but it should have been a 4K day, something like that. This is what it is. But again, it's a good thing to remember. So, let's see. What's the next thing? So the next trade that I took here was it was for a $2,000 day, but it should have been 3,000. I'm looking at the sheet right now. The next day, I ended up taking a loss because I saw the markets running up. I thought the market was going to trade lower again, and it didn't give us that. It immediately took out the highs and went lower. So again, I jumped the gun on Tuesday, and so a lot of times I'm looking at myself, I'm evaluating myself emotionally from a mental perspective, but also the charts perspective. And if I find myself being really antsy and jumping the gun, that means I'm probably like not doing a good job of managing my emotions, or I'm not supposed to be really pushing the button that day. And it could just be life. It could just be me being, overzealous or whatever, but whatever it is. So last trade I took again was on Friday. So I came up initially. I thought this was going to be a long bias because I saw the market essentially take out the Asian lows coming into the session. So I was thinking power 3 bullish, right? So we can take out sell side there. And was able to basically run this. I hopped in a position around 9:30, 9:45 market open. So I think right around here. So I was able to capture this move here to take here. And so there's a couple things that happened. So initially, again, when I saw the lows of Asia had been taken out already, and I'm just gonna get rid of this box right now. But the lows of Asia had been taken out already. And I'm gonna make that a 5 minute chart so we can see that clear. I figured we were just gonna run back up to the high. We did take the high right after 9 o'clock. So I thought this was going to be a clean New York continuation. What actually happened is the initial trade was up, and I think I was up maybe like 1,000 or something dollars, 11 about $900 on the trade, and the market started to pull back. And so one thing that I look at when initial high is set, I always use divergence to understand what is going on between this asset and other assets. So if I pull up ES, I immediately went to ES and I saw that ES set this initial high, which was at 8:30, and then the market came up and took it at 9:30, right? So ES had taken its high. Let's see here. But if I jump back to NQ, that market failed to take its high. Right there. Right. And so to me, that let me know that like the market actually, I'm sorry, that was the wrong day. That showed you an ES, I think. Yeah, my bad, wrong day. This is what I was talking about. So the market failed to take its high on NQ, but it took that high on ES. That's the initial high that was set at 8:30. This is the 9:30 or 10 o'clock high. If you go back to NQ, um, opposite is there. So the market is basically telling me that there's not money, there's not enough money here to make it worth it, right? So I'm gonna X that, make it red. The money that I think is here, it doesn't exist, or it's not enough to make the market go get it, right? So the market immediately broke structure. When that happened, I didn't take a loss. I ended up getting stopped out, I think $200 up, $100 up. A little bitter about that, but I figured if the market was having a issue getting over this high here and it swept the high on ES, then most likely we're probably going to run back down to the low. And the reason that I thought we were going to run back down to the low, again, look at these lows here. These are relative equal lows. That means there's liquidity built up underneath that for sure. There's definitely lows built up underneath that. And so I thought initially that the market was going to potentially take that low, and it did, right? And so I ended up hopping back in a counter trend trade, and I ended up making I think $1,100 on the $1,200 on the get back. And then there was another position here where I was getting a little greedy, and I took a secondary position after the market closed back below that because I figured we were going to continue to run to the next low, which was the low of Thursday, or like the low of the week, I think, which was Monday or something. So again, I'm taking constant inventory of my mental in the trades because everybody's antsy. You're always going to be antsy when you're performing under high pressure situations. It doesn't matter if you're playing a sport, running a company, uh, trading, right? You have to you have to learn how to perform under pressure, right? And so performing under pressure, especially in this space, I think trading is unique because anything you do can literally cost you thousands of dollars in real time, right? If you are too overzealous, you can lose a lot of money really quickly. If you aren't, focused enough, you can miss out on money, right? So a lot of times, performing under pressure comes down to understanding what your particular mentality is or your mindset is as you're going through the trades here. So I've spent like 10 years learning how to trade. I've spent probably 6 or 7 of those years learning technicals, right? And then I hit a wall and I was like, why is this not working for me? Or why am I not winning the way that I should? Or why am I not seeing the gains that I'm seeing other people? And so I had to really understand who I was as a person, break things down, figure out what makes me anxious in certain situations. Because it'd be the same things over and over again. Like people are the same, you know what I mean? Like we all have the same things that trigger us. It might be something might be more triggering for you than it is for me, but we all kind of have the same basic triggers and understandings and fears and greeds in the market. So understanding what causes me to see red, what caused me to jump in early, and figuring out ways to combat those things. Um, and if I can't combat them, then that day, then I shouldn't be pushing the button, right? So if I'm extremely stressed in my personal life, or maybe I just lost a lot of money, or had to pay for something crazy out in my personal life. So now I understand that my mentality coming into the charts is already, how am I going to make money back, right? Which it should be, how am I going to execute the right position today? So doing everything I can to level that, and if I can't level that for that day or that setup, that time, then I shouldn't be pushing the button. So spend a lot of time learning about myself. So when I say all that to say this, that when I got to the point where um, I had taken this initial trade, got stopped out, I wasn't seeing red at this point, but I was definitely seeing like yellow, right? Because I was up a lot and I closed with profit, but I wasn't as much profit as it was. And so understanding that your brain fixates on the highest number that you see your account at, that's always going to be an issue too. But you have to take things into account and what's going on in real time. So the minute that this happened and I ended up being stopped out somewhere in this range, and the market immediately went against me and broke structure, I was like, okay, we're probably going to come back down here. So I ended up being able to catch, another like 100 points down to this level. When I started to hop back in again for a second time, that caught me because then I was like, okay, no, you're definitely starting to just push the button, right? And so now you probably should stop before something happens. Um, and so a lot of times it never happens. Like the trading itself is a signifier and telling me what I should do. But a lot of this has to do with me understanding who I am as a person, right? And every trader has that experience of getting amped up and they get to the point where they just lose or they're up so much they're so euphoric, right? And this was definitely a euphoria trade, right? Where it was the right trade on paper, right? We see that order block there. We see the fair value gap that the market comes through and rejects and closes immediately under, retests just shy of consequent correction. That's a good setup. But we're very deep in the day. I'm already up on the day, so why give money back, right? And so that stuff like that, you learn about yourself. If you're paying attention to yourself, you start to learn about yourself. And so trading for me is not just a game of what's the setup? Because I've mastered that. I understand what I'm looking for when I need to do it. It's more of an execution game and understanding what am I emotionally going through at this particular moment in time, and how do I mitigate my emotions to the point where they're telling me about my body, right? They're telling me about my mentality and where I'm at, right? Like if I get the urge, and for me, like getting the urge to trade the trade, a lot of times comes from I just lost a huge trade. I feel like I got slapped in the face, or I took a lot of little losses. Understanding that, so I know that I won't see if I won't take a lot of little losses if I mind my situations, and I find really high quality setups, or I manage things correctly so I don't see a huge loss. So I don't over leverage because I know that every trade can come against me at some point in time, right? So doing those things when I have a level, clear headed mind automatically cuts down on the amount of times where I'm going to see red on the charts, right? Um, and then you just have to manage euphoria, right? So when you up for a lot for the day, that feeling kicks in and you're like, man, I feel like I'm Superman. I feel like I can't lose a trade. I'm that guy, right? I'm him. And that when you realize that you can lose any trade, it doesn't matter. You can make $1 million in a day and then give back $1,001 on bad trades the next day, right? So understanding that each trade is its own battle, it helped me a lot. And the last thing is just withdrawing profits as soon as I make them. I think it's something new that I've done over the past 3 months, and believe. I mean, I think I've had like 2 losing days in June and July combined. Um, and that's a lot of that has to do with me being able to reset, treating each trade like it's its own battle, and not worrying about building an account. Right. So I was able to take out 16,000 or $17,000, which is probably one of my bigger months in a while. It's a big month. $17,000 is a, especially on personal capital. No, no, I don't think yeah, it's been a minute since I've had a 17K month on personal capital. So but that comes with me being able to reset after every trade. It was with a $10,000 balance, and every winning trade, that balance is $10,000 again. So Understanding that, and basically just taking away the things that cause me to tilt psychologically, has been a really big help for me. So, what's up, Slice Pops? I don't know who you are, but maybe I know you, maybe I don't. But um, yeah, but yeah, so that's basically everything. So I'll look at the actual projection for the indices, but definitely wanted to walk through these two or three things. Again, I don't know what's gonna happen on this because we're wedging, and I don't even want to say like I do, but we could continue to bounce back and forth until we get a breakout. What I'm most concerned about is what does the daily market give us? Like, what are we if we're trading above the high? What are we doing here? Right? This was obviously a closed market. We didn't really have anything going on. But do we run lower? Do we take things up? Coming into tomorrow, are we gonna have a standard deviation level here? We run back up, trade into this gap, run lower for the day. So I'm really more reacting day to day. So it's hard to give a projection in real time. But if you join the group chat and it's free, you don't have to pay anything, you can see more of daily analysis from me. So as the week goes on. So again, same thing. Well, less of the same thing here. This looks more bearish. And I'll say this again, just based off basic concepts that we understand. We see we see that trend line of the market's getting higher and higher and higher. There's probably a lot of liquidity built here. We have this huge opening gap that we never filled in. Really, I mean, we tested it, but we never really filled it in. So market could be running there to go lower. It's not really sure yet. And then also, again, we're oversold. So we did take out Friday's high, did run back up and trade back into the range. So that's not as important because, it's Friday, but you could see a retracement. Let's go to ES really quickly. So same thing here. And then mind you, going into the holiday, there's a lot of liquidity probably sitting above these highs, right? These Asian highs. So wouldn't be surprised if we ran those again before the session started in New York. This is also wedging. It's just a little bit smaller of a wedge. This is the initial high here. Market broke out to the upside. You can see these highs getting higher. So there could be liquidity there. It's all in all consolidation, but this would be our long-term high, right? So we'll see what happens, but I can't really call it. Either way, I also don't want to call it. I just want to react to what's going on in the actual trading sessions. So same thing here. If we look at gold, what I call for gold was basically like I want to see the market react off of this level and trade to this level. Long term, I am looking at this fair value gap. Interested to see the market go there, but it also kind of depends if we can push through this level. We had one run through, two run throughs, three run throughs, and really failed to break below that level. There also is a gap, a volume imbalance right there. So gotta see how the market reacts to this. Is it trade above this high? Does it say it wants to go back in the lows? But for me, we stab once, stab twice, jab three times into a level of liquidity. This could set itself up for a reversal. So I'll be watching that. I don't really trade gold, but hopefully somebody here does. So that's all I got for you guys. If you guys have any questions at all, let me know. Again, find me in the chat. Find me at Brinks Trades. Again, go to talentedtent.com, get hop in the Discord, or just let me know. I can throw you in there. So peace. Hope you guys have a good week.